liquidity for the group.
Okay, well, UltraTech Cement has not only cemented itself as a top player in the industry, but has also managed to script a turnaround for most of the companies that it has acquired. Nigel, you've put together some data for us about the firm's stellar record and what lies ahead for the company.
Well, when the going gets tough, the tough get going, right? And that's precisely what UltraTech has done. So let's go across to the wall and tell you. And that picture really tells you the story. UltraTech Cement, they're not just the king of the cement ring, but also of swing. Now, in terms of the king of the ring, you'll guess right? Because of the kind of capacity they have. The swing factors, because they manage to turn around assets. So let's delve a little bit more into it. Now, if you look at it, in 2022, you had a new player that came into the cement industry. And everyone said, well, UltraTech's dominance is going to get challenged. And from there, in fact, we did have a few days when UltraTech Cement, the share price was under pressure. But after that, it bounced back. And among the top players, actually, the share price has close to have doubled from that time, from May 2022, when the Adani Group made its entry over there. Everyone said their capacity, their market share had moved up from 14 to around 23, 24% odd. Their dominance will get challenged. And in fact, the stock could get derated. I'll tell you what, it is re-rated from there. Let's tell you why. They took the challenge to all the other players, because let's pull up the previous chart. In June 2022, they were at around 115 million tons. As of now, they're at around 150 million tons. This is the India capacity. And in the next few years, they've already charted this trajectory of around 209 million tons. You'll say, well, they moved this 35 million tons. Most of it will be inorganic, right? No, that's not the case. Most of this 35 million tons, in fact, was organic. 95% of this 35 million tons was organic. So it's not only inorganic that they did, but from here on, you'll also see the inorganic acquisitions that will come on stream. That's India Cements as well as Kesoram Industries. But even if you put that together, well, earlier out of their total capacity of around 115 million tons, 56% was acquired. Now that chart has swung around. As of now, close to 56% of the 150 million tons is organic. And even if you go ahead, they're adding roughly around 60 million tons because they're going to go to around 209 million tons. Their capacity after that addition, well, 56% will still be organic. So they've done both a good blend of organic as well as inorganic. So I think you've got the picture as to why they're the king of the cement ring. Now let's tell you why, in fact, the swing factors work. Well, they acquired various assets over the few years. JP, Century, Binani, Kesoram, as well as India Cements. Now, these three assets, they were struggling because of the high debt in the books. But they managed to turn around those assets. And if you look at it at the time of acquisition, all these assets were struggling. JP was virtually shut and they were making losses. Century, well, that was more or less a family settlement, but that one as well, the profitability was much lower. And Binani as well was under severe leverage. And they managed to turn around the first three. Now we'll have to see how exactly do they scale up both these Kesoram as well as India Cements, because as we know, UltraTech Cement, they always do more than 1,000 rupees on a per ton basis. So the first three, they have been successful. The next two is something that we look forward to. How do they do that? The plant efficiency, the maintenance, the coal sourcing, the kind of kcal that they do source, and they've improved logistics as well. For cement, the important part is the lead distance. They have brought that down by close to around 50 kilometers in the last few years, and that results in serious savings. Also, if you look at it, in terms of coal sourcing, they have worked rather hard, and the dealer network as well, they have worked very, very hard. From, in fact, a push factor, they have moved to a pull factor. So put all this together, they managed to turn around. What's the way ahead from here on? India Cements and Kesoram, can they do what they've done in the previous assets? Both of them are predominantly in South India. And that industry is going to be under pressure. So the turnaround of this is going to be interesting. They'll be selling the non-core assets of India Cements. Mr. Srinivasan here on our channel had said they have 25,000 acres of land. Can they sell that? That's going to be important because as of now, they're sitting on a rather large debt in books. Also, the street believes there could be some other inorganic growth in store. Could you see Mangalam Cement? Could you see Orient Cement fold up? That's something we'll need to track. And besides all this acquisition noise in the capacity addition, they have said that they're going to reduce their own cost by 300 rupees per ton via various measures, changing the fuel mix, reducing the lead distance as well. So that's a crucial operational parameter that we'll be tracking as well. Going by everything, in the next 3 years, you'll have UltraTech Cement that will have close to around 27% market share and an absolute capacity as well. They'll be close to around 70% higher than the nearest possible competitor. That's Adani Cement. So that's UltraTech Cement for you. Not just the king of the cement ring, well, they've also proved that they can turn or swing those assets around as well.